price moves fast and you see empty spaces on the chart. We call this a gap. But there are three types of inefficient price movements, and they do not all mean the same thing. This free indicator separates all three of them: true gaps, body gaps, and liquidity voids. So let's see the difference. Before we do that, this is how you add the indicator to your chart. Type liquidity void and you'll find liquidity void suite, square brackets, pulse flow. All the pulse flow indicators end in square brackets with pulse flow inside it. Add that to your chart like I have. By default, all three will come on: true gap, body gap, liquidity void. And each uses a different detection method. And each gets its own color, which you can set. So you can see exactly what kind of inefficiency you're looking at. Let's start with the simplest: a true gap. One candle finishes here and the next one starts here. No wick overlap, no trading in between. For bullish, the new candle's low is above the previous candle's high, the opposite for bearish. And it is a literal gap. But a chart can also look inefficient without leaving a true gap like this. These are what we call body gaps. This is not a true gap, as you can see here. The wicks can overlap, but the bodies cannot. So the gap is between the bodies of the candles. So price may be traded through the area with a wick, but not with the candle body, as you see in previous examples here. Interesting thing to note about a true gap and a body gap is that they can appear in about the same place, as you can see here. So if you see that happening, that's fine. The final type is liquidity void or multi-candle. Several strong candles push in the same direction with very little hesitation. You may be thinking to yourself, this inefficiency looks very much like a fair value gap. And you're right, a fair value gap would sit within there. But look how it came back down here, tested it and rejected it and rejected it and rejected it. So that strong bullish move showed momentum. So there's no gap between them. What matters is sustained displacement. By default, we look for 3 candles. You can set that yourself. Each candle needs a strong body, at least 65% of the total range of the candle. And the full move must be large enough relative to ATR, average true range. And when those conditions line up, the whole displacement becomes a liquidity void. So now we have 3 different ways price can move inefficiently. But why keep these zones on a chart? Before I go any further, there are 3 related videos in the description below. A video on liquidity voids themselves, a video on order blocks, and a video on rejection blocks. Also, would you please subscribe, like, and ring the notification bell? It really helps. Thank you. Back to the video. These zones stay on the chart for a reason. Price can return to inefficient areas later, as you've seen in this example. Sometimes quickly, sometimes much later. That doesn't mean the market has to come back. The zone is not a prediction. It's a reference point, a place where previous delivery was fast and where price may behave differently if it returns. And pulse flow keeps tracking what happens next. But what happens when price does come back to those areas? First, it could fill the area. As you can see in this example, when I turn on show filled zones, you can see it came into that area, didn't close beneath it, but did effectively fill it. At that point, the indicator removes them unless you tell it to show them back to a certain period in time. The next is inverted, when a price comes back and actually breaks down beneath the zone. As you can see here, this is a true gap inverted once broken down. Price closed beneath it, and then it inverts. Inverts is similar to what happens with breaker blocks and order blocks. When a bullish order block breaks down, it can become a bearish breaker block. Similar. If you want to see these, you can to see if price reacted at these levels. Let's go through the rest of the settings. As standard, when you first put the indicator on, all 3 will be on your chart. Inverted will not. You can decide only to have true gaps, or just body gaps, or just liquidity void multi-candle, or all 3. The choice is yours. The various settings here, which I don't touch, but you can if you want to play, which tells you liquidity void minimum candles 3. You can change that to say 4 or 2. So here we've got 1, 2, 3. The percentage that the body must be of the entire candle, 65%. So various settings here. You can decide how many of each get displayed. The last 3 bullish, the last 3 bearish, etc., etc. How many bars it goes back on the time frame that you're on, 500. How many bars we go back to fill inverted. If they get too old, we just don't show them. But you, if you wanted, could set this to a higher number. And then you get to pick the colors you want for each of the styles, both bullish, bearish, and inverted. So how do I incorporate them into a chart? Like everything else, I use them as a confluence. I use them to help me make decisions. For instance, if I was using rejection blocks and I can see a clear rejection here, yet it didn't quite go back up to that rejection block there, turning on liquidity voids, my answer why? It hit a mitigated body gap and was rejected. So yet another powerful confluence to use in conjunction with all the other indicators I have that you can see here, and the link to these will be in the description. In essence, it's an extra tool in your kit bag that helps show where inefficiencies lie, where future price may come back to recover those inefficiencies. Use it in conjunction with fair value gaps, order blocks, rejection blocks, and any other trade setup you use personally. So this is a free indicator. The link is in the description. I am going to be releasing more indicators soon, so please subscribe to the Pulse Flow YouTube channel not to miss out. Also, when you go to TradingView, if you give me a follow there, you will see the indicator launched before the companion video. So all that's left is to say thank you for watching. Please would you subscribe, like and share. You can watch another video that's popping up right now, and I'll catch you in the next one. Bye bye.